Yo, what's up, everybody? Hope you're all doing very well. So, I want to talk to you guys about the market very quickly. I'm super jet lagged, so I'm gonna have a pretty weird schedule for a while. Okay, so usually what you can see happen is like an maybe like a descending triangle before something drops, right? You're gonna see it constantly get lower highs, right? Lower highs or same lows, and then it finally just bam, it tanks to the downside hard. Or sometimes you'll see some sort of triangle pattern where it breaks out of the symmetric triangle, right? Maybe the symmetric triangle is even, maybe it's even sloped upwards, maybe it even slopes downwards, and then it just at the end of it, it just kind of just tightens up, and then it just smashes down. Right? I'm talking about during a consolidation phase, right? That's what I'm talking about. This was kind of a consolidation phase, but what we're seeing more than anything is that if you look at it on the daily chart and if you connected the supports, that's what it looks like. And you averaged out the body the best that you possibly could. I'm talking about the bodies and the wicks, okay? So that looks perfect. So if I were to draw it from like right here, there's no way you guys would even deny that this is a very good triangle drawn, right? Just the way it is right here. That's perfect. But the next candle is the one that really gives us a lot of issue. Okay? So you're just gonna see it now. See what I mean? It gives us a lot of issue because it actually breaks to the downside now. And then if you scroll back to like say 3-day chart and then you take a combination of wicks and bodies, you kind of see that maybe, just maybe, like it'll hold a little bit here, but probably not. Realistically, probably not. I mean, this is not that significant because we're getting there already, right now. So we basically have to bounce now. If we don't bounce now, this is 100%. It's going to hit like 24,500 ranges or so. And then if you take a look at like, even if you're just looking at it from a very simple perspective, right? Trendline perspective, it needs to bounce now. Now, there's no guarantee that it's going to drop, but it does look way more bearish than it does bullish. In fact, if we do bounce, it's going to have to make some sort of V-shaped correction. It's not going to be a slow one. It's going to come down here, and then it's just going to go bam. It's going to bounce upwards. But is that likely? Looking at how everything is indicating right now, no, not really. Like, it's not likely at all. I mean, the daily is about to close. It is on a parabolic trajectory going to the downside, literally. I mean, the last time we had something like that, it's been a while. If you look at on every time frame, like on the 3-day, on the weekly, 4-day, the weekly started to cross over already, despite the lagging indicator. It's crossed down already. So, I mean, realistically, we're probably gonna get something like down over here. I would say like mark my words, guys. I'm gonna predict around 22,500 first. That's gonna be my first prediction. But realistically, if I had to make a solid prediction right now, and the worst part is I'm usually right, right? Like I'm usually right long term. I'm not right for timeline, like for how long it takes, but I'm usually right for the price eventually. And if I had to predict something, I'm gonna predict between 18,000 to $20,000 in the next 3 months. Yeah, I'm serious. In the next 3 months, like before October, I think we're gonna hit those lows, and then from like no like from basically October November to the halving, that's where the rally is gonna really begin. I've had a lot of time to factor in the macroeconomic news, and especially with the SEC and regulation going on right now. I've had a lot of time to look at just technically how the market is going and how regulation is heavily hampering and dampering the market. So factoring in all of this, it speaks volumes looking at the charts technically, and I can see that all coins are going to continue to bleed for a while. I can see that Bitcoin, there's no reason for it to go up right now with this fight against Gary Gensler and just regulations and the SEC in general, which is really ruining the markets. Coinbase, Binance, they're in trouble. Like they're not in trouble as in they're going away for sure, but they're in trouble as in this fight with regulation. It's a major obstacle to overcome right now, and I firmly believe that it's gonna slow down the progression and the adoption of crypto, especially. And I'm also hearing about how like Democrats are really maiming. They're stopping crypto in its tracks in America, and they don't want to be the country that's going to leave behind crypto, so every other country can adopt it first. So I believe that we are going to eventually slow down for a while, for a few months, which is good because it's going to allow me to relax a little bit before a major period of volatility occurs. And then I think that here is a really good target, guys. First of all, 22,000. And if that doesn't hold, we're probably going to see 18,000 to $20,000 regions. And the reason I say that is because of this. Like, and someone said to me before, why aren't you using log? I'm like, there's nobody says you have to use log. It's not like everybody's looking at a long time frame on log. Like log only makes the charts look more presentable. That's it. So it's easily understood. Like all that log does, it just makes it look more visually appealing. But who cares about log when you're drawing trend lines, to be quite honest? And the reason I say 18,000 to possible like 20,000 is because of this right here. This gigantic ass trend line that's been forming for a while. I think that there's a really high opportunity for us to hit this lower region again around 18,000, like right here. Okay, right around there. So it's going to be a perfect solid place for a major entry. Now, am I going to shed some of my position? Yeah, I am. I am going to shed some of my long-term position because I do believe, like, not a lot. I'm not talking about a lot. I'm talking like 10%. That's it. So that 10% is really going to add up. It's going to make up the difference, 20% maybe. Okay, maybe 25 to be honest. It's going to allow me to buy a lot more, have more buying power down in this particular region over here around 18K. 18 to 20K, I'd be very, very interested. But as it stands right now, we're not going to be going anywhere, I don't think. You look at it from a monthly perspective of the highs and the lows, and you can see that even like right here at 23,400, pretty strong from these candles, but no guarantees, of course. Monthly candle is just looking very, very bearish. Every candle is looking bearish across the board. The weekly candle's got 4 days to close. It's looking nasty right now. Or the 2-week candle, actually. And the weekly candle and the MACD and the RSI, it's on a roll to the downside. So if you're expecting any type of bullishness right now, I really wouldn't be counting on it too much because the market is not bullish at all, guys. The market has been incredibly bearish, and the bears have absolutely taken over control. So this is my opinion. I really hope that I'm wrong, right? I'd love a bullish market, but my probability of being right here and my confidence level, my rate of confidence is probably over 80% right now that we are going to be in this market, this ugly ass market for a much longer period of time. Yes, there will be some coins that will rally against Bitcoin, and there's going to be opportunities for us to day trade some other coins. But in terms of, are we in a bull market? I made a video a few weeks back outlining the reasons why we're far from a bull market. And check it out at the end of this video. I'll link it at the end of this video if you want to see the reasons why. And my buy still stands the same, where the bears are in complete control right now of the market. And don't count on the bull market for a while, but make sure you stay patient. Make sure you're studying. Make sure you're still learning about the rules of a bull market. Make sure you're studying your strategy and fine-tuning it and backtesting and bar replaying, because right now it's just a period of patience. Right now is a period where the really crappy traders, the crappy investors who have weekends, who can't understand that there's going to be ups and downs in this market, they're going to be the ones that are going to be pushed out of the game. But the people like you and I that are watching this channel of mine, that are listening to my advice, that are taking what I say not to always heart, not 100% listening to me always, but taking into consideration, think about the market and the conditions of a bull market and why we're here right now. Understand that these are market cycles that are natural in the market. There will be periods of ups, there will be periods of downs. Once we understand all of this, we can take a step back and really digest a lot of this information and wait for better days. And once you wait for better days, trust me, it's going to pay off immensely. And in 3, 4, 5 years from now, when you catch the next bull market, you're not going to give a crap about, having to wait another 2, 3 months for a bull market a few years ago. So thanks for watching me. I want to update you quickly. If you want to see the previous video I made about why we're not in a bull market yet, why we're still in a bear market, check out the link here. It's going to be posted right about now. See you guys later. Bye now.